lots and lots of charts to review after this week that ended the first week of August, August 3rd through 7th, for this weekend update. We're going to start with QQQ, and I do want to point out that there is some possible weekly divergence on the Qs from the June 10th close to the close on Friday, August 7th. Now, that doesn't mean that a pullback is imminent. Uh, Tech was down on Friday, this August 7th, while small caps and financials were up, and the SPX was basically flat. Um, I would point out that there was also a weekly divergence in the SPX against that same uh, June week. This was actually June 5th here on the week that ended July 17th, and that actually didn't play out. There was kind of the next week flat, but then the uptrend continued. So wanted to point that out because there might be a rotation that's occurring. Perhaps the lagging small caps, financials, and industrials money might be rotating out of tech and into those, and I want to make sure that we take a look at all of them. QQQ on the daily chart, I do have a price target at 275, which was its high on Friday. That does satisfy the end of a full major wave up from the March lows. Now that's my blue alternate count right now. The targets down here I think were clear on the weekly, so I can just copy those over into the daily, and let me just delete that real fast and get those copied. So if in fact a sell-off is now going to be happening, you can see where that might likely take QQQ. Um, the primary count that I'm still tracking is the Super Bowl count, and it does have QQQ moving up probably relentlessly up above 300. I maybe have a little bit less confidence in that this week, but there's some individual stocks, I think, big tech names that we want to take a look at to see, uh, maybe give us some insight into what that might look like. On a short-term basis, I would just point out that there is some closing divergence on the short term. It did try to work itself off with a sell off later in the day. What's yet to be seen is, was there enough of a sell off throughout the day in QQQ to work off that overbought condition, and then is this bounce right here at the end of the day an indication that we're going to be moving up, either towards a higher target for the end of a major one wave, or going up towards 300 in the Super Bowl. We're going to see a very similar pattern on a lot of individual stocks. SPX does not show any weakness on the weekly. I do, again, have some evidence for um, a major one wave that could be completed at about 33.53. That would be the high that was made in SPX on Friday. Without some confirmation on the weekly, maybe not real optimistic. The daily does show RSI divergence against the closing price on June 8th, along with MACD divergence. But you know what? It's been showing that since basically, nearly this last close here, these last few closes towards the middle of July. So this type of daily divergence can play out for a long time. It is going to tell us that at some point there is going to be a meaningful pullback, unless, of course, this black count wins out, and this potential divergence on the RSI and MACD just get demolished to the upside. So on a short term, counting wise, there is some evidence here that all of this minor 5 wave could be done. Here are those lower price targets on the SPX. Again, if there is a sell-off, not expecting it to be massive, but the numbers that you see there certainly would seem to be a little bit painful. But I'm definitely not calling for anything probably much lower than 2,800 if we do in fact get a bigger sell-off. On the short term, there's a lot of short-term possibilities here. There are two things that would lead me to believe that maybe we did make at least a short-term top at 33.53. There is a short-term pullback target with maybe potentially some weakness Monday or into Tuesday that does get bought. You're going to see that that's also consistent on some individual stocks here in a little bit, and you can clearly see those upside targets. That's definitely possible for the SPX to resolve to. Let me now move to, let me get into the Dow. So the Dow has yet to make an uptrend high based on the June high, and is obviously lagging quite a bit from its all-time high back in February. I think, though we're seeing a breakout, I think there was a minor four-wave triangle that consolidated for over a month. And then I think we're starting to see the breakout here. I have a 5=1 target that would put the Dow at a new all-time high, possibly by the end of August. Now, there could be some short-term weakness in here within this minor wave, but I do think the Dow will, in fact, make a new all-time high, along with IWM. So IWM here, looking at the daily, a really nice breakout this week in IWM. I was holding both TNA and IWM calls. I took profits on those on Thursday on this kind of this long-legged doji candle here on Thursday, where the indecision of that candle led me to take it all off the table. And then, of course, I missed a great move in IWM and XLF on Friday. But that's according to my discipline. And I'm not going to beat myself up over taking profits on what were really good trades in IWM. Looking to the short term, I do have upside targets above it. It is possible that this minute wave 3 is done. And one reason why I would not have added anything on the close is there definitely is short-term divergence here on both the RSI 9 and the MACD. So I did not add anything on the close, even though it was a nice strong close. I did not add anything in post-market trading because I think we've got a little bit of that divergence to wear off at some point. And according to this blue count, it would be a minute 4 wave. And according to the primary black count, it would be some type of just sub-degree pullback within this bigger minuet degree 3 wave up. So still looking for upside targets in IWM. It already broke out above the June high, and so now we're simply looking to see how high it can go. Okay, financials really have been lagging the market, but again, a great breakout week for financials. They are working on closing this gap that you're going to see right above 25. You're going to see that on the short-term chart. I do have a bearish target that could potentially lead to a reversal, but as of now, this inverse head and shoulders that I've been talking about for a while, that breakout is strong. Unfortunately, I missed Friday again. I took profits on my XLF calls and my FAS on the close on Thursday when it was just slightly down from Wednesday's close, so I missed out on that. But again, never unhappy to be taking profits. We're going to see if this is a winner that's going to keep running. You can see my upside targets are quite ambitious. If we do get the continuation move in small caps and industrials, if there's a rotation of money out of tech and into these other indices, then you could definitely see a quick move. See XLF up at 27.28, breaking out from its June highs. So a short-term target is this gold gap line that I've got here. That would also be a potential for a bearish reversal. So I'll be looking at that closely. Maybe XLF early this week wants to close that gap. But if it reverses hard and loses these supporting rails, I would then maybe be thinking that this red bearish count might actually be in play. So really going to be watching these closely to see if the strong upside move this week is going to continue. So let's get into some individual stocks. I want to throw some new ones at you that you haven't seen charted yet. And so we're looking here at Beyond Meat, and we're looking at F5 Systems. And these are just some potential plays. It could be long-term for the long-term fund, but more likely I'm probably going to try to time some short-term leverage on these because I've got them both potentially at the beginning of a major three, especially here with Beyond. So if I see any more consolidation right in here around the 13-day EMA, the 34-day EMA, maybe even moving down a little bit more into the upper 120s, I might be looking to take a shot at a ride up here for a 3 of 3 wave. So definitely want to be on the lookout. There is also kind of a right shoulder target for maybe a head right shoulder, and the left shoulder would be back over here pre the March crash. That could take it down to another low, but I think Beyond Meat has some pretty solid upside targets, and I'll definitely be looking to see if this gap. So this was a negative earnings gap. Beyond Meat still actually isn't profitable, so it's definitely in the early stages. It's still very risky, but think back to so many other names like Chipotle, and that's in the restaurant sector, but even beyond that in tech, Netflix, Amazon, all of it originally began, they weren't profitable with extreme upside targets. So let's just see what happens here. I certainly would be interested in playing this gap close breakout, possibly buying maybe some end of month August calls looking for a price up here. In F5 Systems, it is possible that we haven't yet completed a major 2 count. I've got the alternate count in that wave 3. We're going to see here. This is essentially a neckline, also of a head and shoulders. This would be of an inverse head and shoulders here. That if that breaks, then I think I would definitely be considering entering some leverage here on FFIV, possibly going all the way up to 170 and 180. So just some fun short-term stock plays in some names that you haven't yet seen before. Let's get to the names that I do talk about the most. And I want to start with Apple. So with Apple, there is a possibility here on Apple that it made a major top. There is divergence on both the Stochh and also on the RSI 9. There isn't divergence on the MACD. You don't need all three in place to have a meaningful pullback. There are upside targets that it definitely could hit, but I am on the alert for a topping process happening soon in Apple. It could be related to some news events. I've been reading about antitrust lawsuits that could be coming out, maybe even action from the U.S. Department of Justice against Apple. And if that does hit over the next few weeks, that definitely could usher in a significant correction that could take it down well below 400, probably not going below 300, but you can see some of those targets. Now, on the short term with Apple, there's something interesting. I'm wondering if Apple does have one more push yet to go, but if we're going to get some weakness early in the week. So I was going back here to July 21st and 22nd, very, very similar sell-off patterns and RSI patterns that led to a final flush to complete a wave 4. Here it was a minor 4. Here it's going to be a minute degree 4. So what I'm not sure is what was the overbought condition at its current all-time high. Was it worked off enough throughout the selling that occurred on Friday, or does that need to work itself further into oversold territory? We're going to see. So this could actually be the minute 4 bottom, and we get a blast off up here to this final target that I have, about 475 for Apple. I really don't see Apple going much beyond that. I've seen out there on Twitter a lot, Apple at 500. That does not seem likely to me. I'll be looking for signs of topping in this range. So a a pullback on Apple that finds support at either of these two black rails, I would look to enter some leverage, probably some Apple call options, maybe for the end of August, trying to catch that one last leg up. But I'll have that on a very short leash, understanding there could be a top in play. So Facebook, a very similar setup. I think Facebook also has one more leg up to go yet to meet either a major top, but I also have the possibility that Facebook is actually already in its major three. So it had a more significant sell off on its daily chart than Apple did. Apple's basically been confined to a very, very tight move, except for this volatility right here before earnings. In Facebook, again, like Apple, are we going to see more of a pullback after Facebook's all-time high was made in early trading on Friday? Again, is there enough selling that's occurred to work off that overbought condition? This is what I want to see. I also think a pullback to here would be buyable. I would again point out, just like Apple, here's Apple's earnings gap, and here is Facebook's earnings gap, and those gaps do like to get closed. If those gaps do get closed before a new all-time high is made, I think you can probably move the topping labels and keep them in place on that. But we're going to see if this is buyable before another upside move and then a more significant pullback actually closes those gaps. Let's work into Amazon now. Okay, so Amazon really is sitting at a binary move. So either there's going to be a big breakout early in the week above this dashed blue resistance rail, or we're going to get just a waterfall sell-off down to what I think would be about 2,800. So on the short term for Amazon, again, here's its earnings gap. So I'm really going to be watching that carefully. I would throw in a third possibility. It's possible that Amazon does sell off temporarily to close that earnings gap, but it resumes its uptrend towards new all-time highs. So I actually am short here on Amazon. The sell-off that occurred on Friday, I thought there's reason for it to keep going. I would have about 30.70 in mind for a profit target. If I continue to see weakness and there's no divergence on the RSI, maybe in fact that minor 4 leg isn't done. But I will be looking to get rid of those on any gap up that moves back towards this, what is now going to be a resistance rail. Certainly anything that breaks above this blue dotted line is going to get me out of that trade. So now let's look at Tesla and then Google to finish here. So Tesla, again, is in a binary position. Either it's moving up big time towards new all-time highs, or it's going to have a really hard sell-off. So you can see either of those targets here. There are actually two open gaps in Tesla, right around the 1200 to 1220 range, and then a little bit lower in kind of the low 1100s, low to mid 1100s. So sell-offs that close that gap, I've got them here, and that would be of a major degree on the short-term chart for Tesla. If the bull is back in place, then the bottom was in on Friday, and that late day sell-off that resulted in a bounce was enough to resolve that condition, and it's moving hard up. Or it's actually going to be similar to Apple, Facebook, and Amazon that had an overbought condition that sold off throughout the day Friday, that became oversold, and then recovered slightly. But the question is, of course, has that been resolved? or is there more selling? If there is more selling in Tesla, I think it's going to be hard. I think we're going to see Tesla down below 1,300, and then I have targets even below 12 and 1,100 if the sell-off for Tesla gains some speed. Okay, Google. So Google was one that I was initially bullish on early in the week because of the negative reaction following earnings. I thought I could get a bounce in it. I did have August 14th Google call options on, but when trading opened on Monday and Google was down and then essentially flat Monday and Tuesday, I exited those, but I re-entered. So I re-entered when that support rail held, and I was able to gain almost all of that percentage gain, that big green candle that you see here on Thursday. But we get into Friday, and we get this indecisive doji candle, and I chose to exit. So not holding any of those Google calls, that indecisive long-legged doji. It could break up, it could break down. You can see perhaps this minor B is in and we're moving down, or there's a big bull target still in place. So we'll see. Again, are these support rails going to be active like they've supported it during what I'm calling either a minor A or a minor 2 sell-off? Could there be a pop up to maybe a higher target for minor B and then a reversal that decisively breaks those rails? Or is there a gap down? Does it follow the weakness that I've indicated is possible for a lot of the other big tech names? So we're past earnings season. At least the majority of the big names are done. The major economic reports are all in. Factory numbers, services numbers, the jobs report from Friday is in. The only piece of news that's really hanging out there is what's going to happen with the coronavirus stimulus deal. And the news outlet said on Friday during the press conferences they're far apart, and Trump is saying that he's going to do some type of executive order on a payroll tax cut and extending unemployment benefits. That is yet to be seen. Is it even possible? What mechanism would fund it? Is it even legal? So if the market reacts negatively to this uncertainty, we could see some quick sell-offs on Monday. But we could also just see that the market is already pricing in that a deal is going to be made, and the market just relentlessly keeps going up. So we'll see what the response is. It is the dog days of summer, as many traders like to call them. But I don't think our action is going to be dull in the month of August. I think we're going to see a lot of very tradable action. I'm very excited. I'm ready. I've got a little bit of downside hedging, but I am in the largest cash position in both the aggressive trading fund and the long-term fund that I've been in since probably mid-April, when we were still waiting to see if the bull actually was going to have legs. So I'm not decisively biased one way or the other. I'm going to definitely wait for action to show itself on Monday, but then I will absolutely be ready to pounce and play more aggressively on either pullbacks or breakouts if we get them. So good luck to any of you that are actively trading, and hope you have a great rest of the weekend. And I'll be active as always on Twitter, updating these charts starting Monday once the action kicks back in.